All right, folks, welcome to the Wednesday evening analysis. It's March 18th. Prices of Bitcoin currently at 5394.5, and the S&P 500 closed somewhere around 2398. So just about very close to a key level, which was 2402. Actually, it looks like it actually closed above. So the reason this was a key level is because this was actually the base March 16th, which was Monday. Okay, and then we took out some stops from that base and then pushed back up. So this was initially the range low right here, and this was the range high. And once we took out those stops, today again we tested that same area that was support as resistance. Okay, so if the buyers are really going to step up, they need to show tomorrow with conviction that they can push this thing back up towards 2,500, maybe even 2,600 points. It's a very steep hill to climb, but that would be the only thing that would essentially show me conviction that the buyers are ready to push this market higher. Until then, I think we can rely upon the 2018 base that we created right here, all right, on the S&P 500. That was about 2350, and you could see today's price action actually pierced that base, okay, but then we closed up above it, right, which is this green box right here. However, we still closed negative, okay? We closed about, let me see here, okay? If we zoom in a little bit, right? From the candle open right there to the close, about 2 or 3% negative, right? For the most part, folks, it really doesn't seem like the market is slowing down in terms of its selling. Across the board, whether you want to look at S&P 500, whether you want to look at, here's another thing, right? If we start looking at US oil, okay, so this is crude, all right? This was, by far some of the more startling comparisons of what's happening in the markets, the macro markets, which is that oil is just falling off a cliff, okay? Now, one of the things that I pointed out, and I wanted to show you guys, is that oil and natural gas is about 8% of the country's GDP, which is the United States, right? And it has about 9.8 million jobs. And if oil is plummeting, we're already losing jobs. And on top of that, there's really no demand because the airlines, the cruise lines, people themselves are basically forced to not fly, not travel, not use oil, right? So oil is going to keep plummeting, okay? And on top of that, companies that are basketed in the S&P 500 will also essentially keep losing points and keep losing their share of the market because there's really not a whole lot of future expectancy on profits that they can count on right now. Because here's the thing, right? I put out this post earlier, and JP Morgan Chase, which is one of the biggest banks in the world, estimates the GDP for the US coming up, okay? Q1, which is about to end in about, what's today, 18th. So about, 13 days or so, we're forecasting a -4 GDP growth. Okay, Q2, -14, and then maybe Q3, Q4 could get better. But a full year overall, we're looking at 1.5. And by the way, I think this is conservative from what I've read from other analysts too, okay? So it could be a really rough year for pretty much everyone. Okay, everyone is going to be impacted by this. It doesn't matter what industry you're in some way, somehow, you're going to feel the impact. All right. So overall, I would say anywhere between -1.5 to -2.25 is, are some of the estimates I've read. All right. On top of that, right, we talked about oil being a large factor of the GDP. Okay. On top of that, if you read this article, I put it into news, I think, earlier. This is basically Zero Hedge writing a sort of a dark, grim view of what could be coming up ahead, which is that we're essentially racking on more debt, okay? The banks themselves are not going to be getting paid on that debt because consumers, businesses, and even governments don't have any inflows of income, right? No one is paying them back for their products, their services, their debt, okay? So they're going to default on larger portions of debt, right? Tourism has pretty much stopped, so that's 10% of the total global GDP. Oil prices, like I said, will impact overall the GDP of the United States and possibly the world, because there's many industries. Oil is in a big part of an economy of many, many countries. Okay. Retail chains right here, obviously already seeing struggles from the last, 5, 7 years. Um, Amazon essentially being the one that is crippling them, are finally going to maybe get the nail in the coffin, because again, no one's going to be able to be visiting stores. Okay. So all around, things are just really looking grim and rough, right? And so what that means for the markets overall is that if you've read Faisal's equities post right here, again, this is for Advantage members. You could go read this anytime right here. If you read his post, he's been kind of sounding the alarm on many things related to the market, and so have I, right? We've been talking about this kind of potential debt building for like almost a year now, since last July at least. And you can go back on my posts and read them way back here. Obviously, I was a little early to that party, but coronavirus was the needle that pricked the bubble that we were essentially creating, right? Which is this 10-year, massive bull cycle that we've been seeing, right? So finally, now that that bubble has been poked, where do we go from here, right? So first thing is first, obviously this support has to hold, okay? Now, as I've said before, as per Dow theory, there are 3 phases to the bear cycle. Usually there's, phase 1, which is the drop, a sharp drop. Phase 2 is really arranging in a distribution like this. And then phase 3 is the final capitulation drop to the downside, okay? All in all, this full 3-phase cycle could be anywhere between sometimes as low as 25%, sometimes as high as 60, 70%, depending on how severe the cycle is, the surrounding economic impacts, as well as how much your government can do to essentially combat this kind of sell-off. Now, unfortunately for the US, as I've been saying, that it was really not wise for the US to cut interest rates all the way down to 1% or 0.5%, well before we even got to the coronavirus stage. And now that we're at 0%, and we've already injected 1.5 trillion into the economy, you can see the markets have really not done a whole lot. Usually this news maybe a few years ago would have popped the markets pretty drastically, right? But so far, hasn't really done anything, okay? Oil is suffering, right? The forecasting GDP numbers are pretty grim. The unemployment numbers that was apparently just talked about just today or yesterday, it also look really grim. Unemployment in the US could reach almost as high as 20%, which means globally it could be just as high, if not higher. Because remember, globally, there's also businesses that are being impacted by this. Tourism is going to be impacted by this. Oil companies are going to be impacted by this. Retail, consumer level industries are definitely going to be impacted, especially, due to the coronavirus, right? So what we're really seeing, folks, is a very bleak picture of what lies ahead. And as per this morning's video, I also told you guys that it's time to start preparing for, maybe building sort of your own, war chest of cash. Look out for companies you want to do research on that you want to pick up maybe when the blood is really in the markets, and start buying into those companies, whether it's, Bitcoin, or if you want to pick up equities or commodities or whatever, okay? So this is going to be the time for you to be a little bit more conservative, be a little bit more hoarding, I guess, of cash. All right, again, not investment advice, but it's just something for you to consider given the current market conditions, right? I know I've been heavily in cash since essentially, mid-February and March, right? I've told you guys, even in long-term, I closed out all my long-term holdings right there on February 12th. I warned my Advantage members well beforehand. So hopefully you guys paid attention, okay? Now, with that being said, right, with oil selling off, with S&P 500 selling off, Bitcoin selling off, the go-to asset for our community is obviously Bitcoin, right? So where are we and where could we go with this, okay? So let me pull up a chart and show you guys exactly where we are, right? So first things first, obviously, what we've done so far is we had this ascending triangle right here. Unfortunately, that broke down, but it actually met a nice support right here around 5,045, which again, the community members knew well beforehand when we were trying to take profits, which was one of the markers, 4,000, or I'm sorry, 5,045. Getting a little ahead of myself here. um, so anyway, point is, that was the first take profit area, right? Unfortunately, when the price spiked back up here, we pretty much cut down our short, and then essentially now we're short again. Okay, so now that we're short again, what are we looking forward to? Well, number one, the ceiling right here, which is this wick high, 5,435, that area needs to hold. Okay, so far it's been doing a pretty darn good job, but the thing is, you don't want price to keep continually, hammering this area over and over again. This is, really not a good sign, in the sense that when you keep hammering resistance like this, chances are higher that it's going to break upward. Okay, I haven't seen any, I guess, bullish momentum try to push the price back up. In fact, what I've seen is a couple different signs that are telling me that after this initial first push back up to 54.35, the next movement back up had particularly low volume, right? So it seems like price is being guided up, with very little volume. So it could be very possible that in this particular area, maybe shorts are being filled. Maybe people are FOMOing long into this area. I don't quite know, okay? But the fact of the matter is, if we're following equities, if we're following US oil, if we're following other markets, Bitcoin at some point should be going down. And does that mean that it has to go down from here? Not necessarily, right? The other levels that we're looking forward to are 5,600 and 5,873, which I've spoken about for the past few days. So it's very possible that, maybe in the next few hours, maybe the next day, price may push back up here, but up here is where I would want to be looking for shorts anyway, okay? So, I'm really not long biased. I just don't see the long bias yet. If I do have, any bit of a long bias, I'm essentially trying to go from, a small level to another, next resistance level, not sizing too heavy. And in general, in this market right now, folks, given the conditions of the market, you shouldn't be sizing heavy anyway. Okay, your losses should be very contained. This is actually a time for you to start learning how to reduce your position size, reduce your risk, reduce your greed, essentially, in a market like this. Okay, and I think that's going to be very helpful. When the bull market, whenever it starts, if it ever does, right? Again, not trying to be dark with the picture, but we don't really know if Bitcoin is going to go back up anytime soon, right? Forget the halving, forget everything that's associated with the fundamentals of Bitcoin. As I've said many times before, it clearly acted as a very high risk speculative asset, and it got sold off like any other crypto shitcoin. So we should treat it as such until it shows us conviction and strength. Okay. So until then, I'm essentially looking for shorts, right? I'm also keeping in mind the bigger picture, which is the stock market, which is U.S. oil, which is also things like the rough estimates of what GDP numbers are going to look like, unemployment numbers are going to look like, which sectors are getting hit hard, all the fundamentals behind the stock market. Okay, so that's kind of my game plan for the days ahead. And again, I'm going to keep my positions tight, and I hope you guys do too. Okay, any questions so far? Okay, no questions so far. All right. So I think I want to keep this analysis short and sweet, but for the most part, I think another way to maybe look at this is, one could make the argument that, let's just say this wick high. So if you go on the 4-hour time frame, let's just say you want to be trading only on the 4-hour time frame. Okay, so say right there. All right. The reason I'm picking that wick is because that was the first big impulsive move. Okay, every move after that is just really sideways. Okay, so the one argument that we can make is, as long as we don't see a 4-hour close above this area with strength and volume, and not just like a piddly close, like $10 above the marker right here, which is 54.33, we need like a strong close with conviction. But until we see a strong close above this area, I would say statistically, it's better to be short anywhere in this area right here, which is these 4-hour candles. And you can place your stop, anywhere above any of these wicks, or if you want to be safe, you could place it above this area right here, which is high of this wick. So that's 55.66. So you could place it around, 55.75, $5,600. Or if you want to be really safe with your short, size down a lot, you could place it above this wick, which would be around $6,000. Okay. Now, as per the daily, again, nothing special on the daily. Yesterday we saw something close to a bullish engulfing, but not really. Today's candle kind of looks like a hanging man, so not the best candle to have right now. But again, we still have about 3 hours to go in the daily candle, so anything could happen. Hanging mans, by the way, folks, I really don't like hanging mans after a couple of bullish candles, because this was your hammer, this was a bullish candle, and now the third candle is a hanging man. Hanging mans typically are exhaustion of the pushback up. Sellers came in, weren't able to close the price below, but the buyers also were not able to close the price above. So it's really like an indecision point, but more often than not, in my experience, hanging mans lead to a little bit more downside. Okay. Let me see here. Let's check out the weekly. All right. The weekly itself also looks kind of like a hammer right now. So, nothing too bad, I guess. We still have about 4 more days to go on the weekly, so anything can happen by the end of that. Remember, the market itself is now going to start factoring in, the GDP numbers that are coming out, because as more and more data comes in, as more and more countries are shutting down their borders, as more and more we have social distancing, people not able to go out, not able to spend money, I think we're going to start seeing the market essentially price in what we're expecting for the few weeks or few months ahead. Okay. And again, if you go to the equities update right here, Faisal and I are pretty much on the same page. The only thing that I personally see right now is this support, which is also something that he sees. And if this support doesn't hold, then we're looking for more downside ahead. Potentially, if we start looking on a monthly scale, all right, this was really the large consolidation we had, all right, before this big rally up. Okay, and that was almost let me see here. That was almost I guess, 14, 15 month long consolidation in here, right? And if we throw out some markers right there, right? So let's just say the high of this area right there, and then the low of this consolidation right there. So we're looking at, from current price action, at the very least, we're looking at another 11%, and at the very bottom, we're looking at another 24% downside, just in case we come up in this box right here, okay? So between 11 and 24% more downside is to be expected if we cannot find support, like I said, on the daily time frame, which was over here. Where was it? At this support from 2018, okay? And obviously, you guys very well know that support from 2018 for Bitcoin matches around $3,100, okay? So I would potentially think that if we start pushing back down lower, I would probably figure that Bitcoin goes lower as well towards that $3,100 low. And if we start turning on the pivots on the weekly, as I've said, this would be the big pivot that I'd be looking forward to, which is the S1 around $2,400 or so. All right. So that's pretty much it. I'm still in my short, not expecting a whole lot of upside. If it happens, it happens. What can you do, right? The best you can do, folks, is, like I said, set your stops properly, size properly in this market, and just be very careful and cognizant of where you are in terms of the cycle of price action, as well as where the S&P 500 is. Okay, I know for a lot of you, looking at the stock market is probably not second nature by any means, but that's why I'm here to give you outlook day to day, and that's why we have Faisal to give us some great insight. Okay. Are we seeing any decoupling of BTC from traditional markets today? Looked like we had more dumping latter half of today and BTC held. I don't really know if I want to pay attention to the smaller time frames. I think it's best to just assume right now that the coupling is still on because the market overall has still sold off. And number two, we're still, in terms of macro events, we're still in a peculiar area of, very much global and economic uncertainty. Okay, and if that is still the presiding sentiment, we should assume that Bitcoin should essentially follow the S&P 500. Okay, I really don't see any decoupling anytime soon. All right, just because we've had one half of the day where we haven't really sold off doesn't mean there's any decoupling. Just FYI. All right. Have you noticed the alts have a little bit more clarity for the larger time frame trend? For instance, LTC ETH look like a descending triangle. I gotta be honest, I am not paying attention to alts. I really don't care about alts right now because it is just a dangerous game to even look at alts unless you're aggressively trading them. I don't really see a point when all of the entire world is really focused on the macro markets, and especially if you want to look at alts, you just have to look at BTC. I know people say that, alts sometimes do give you a better understanding of what could happen to BTC, but excuse me, as of late, so far they haven't really shown me anything. Maybe in Ethereum, I guess you could make the argument that there's maybe a symmetrical triangle being created, maybe in Ethereum like this. I'm cutting off a couple of wicks, but let's see, just to make like a best fit pattern. This is kind of what I'm seeing, right? And so if we're looking at that as your symmetrical triangle, this is potentially, we can make the argument that, let me see here. Let me turn this on to 4 hour and this one to 4 hour as well. So we can make the argument that maybe this 4 hour could be like a large, bear pennant that's been created. I don't know. It's really hard to say, to be honest. I personally am not looking at alts, but if I were to say anything, this is definitely to me looking like a bear pennant. So if you want to maybe short this, maybe wait for the trend line at the bottom right here to be breached. If you want to long it, maybe at least wait for this descending trend line right here to be breached. Okay. I don't really see any resolution so far. I guess you could make the argument that, hey, there was a low right there, a higher low, and another higher low, and based on that, you could maybe take a long. But I find it a little risky to be long in these situations. Like I said, in these situations, you really want to size down, be very careful because stops are going to have to be wide. Bitcoin is just having such, crazy volatile movements. Like even just today, right? If we just look at today, we had this happen today, this happened today. Inside that, we had this happen today and this. So a lot of craziness that happened just today itself. So, and also we had this come down today and then this pop up today itself too. So volatility is kind of the name of the game right now, and if you are not careful, you're going to piss away very important capital. So do be careful. All right. But yeah, I think that's pretty much it. I don't think I have anything else to cover. Thank you so much for watching, folks, and I'll catch up with y'all later in Discord. Okay. Cheers.